I'm in Florida for Nareit's 2019 ESG Forum. Joining me today is Ari Frankel, Assistant Vice President, Sustainability and High Performance Buildings with Alexandria Real Estate Equities. Ari, thanks so much for joining us.
Great to be here again.
You were named the Nareit's 2019 Real Estate Sustainability Council Chair. And in that role, what do you see as some of the key topics that the industry needs to focus on that are most important?
You know, Alexandria has a long track record of being involved in industry leadership, and we're, humbled to serve. We're looking forward to continuing to promote and advance, best practices in sustainability and ESG. I think there's two areas, as we talk about it here at the forum, and it seems to be a continual topic. But the two topics I'll cover briefly are ESG data and then disclosure. The two are related. But on the data side, there's a wide landscape of ESG data providers out there and a wide range of how investors are using it. So we know that investors are increasingly using it. I've seen that the head of iShares has identified there to be about $25 billion in ETFs right now that are screened with ESG, projecting that to be $400 billion by 2030. And they're using a lot of data sources that whether companies like it or not, we're being rated. And then other companies that are more active managers have their own bespoke processes. So as a real estate sustainability committee and just Nareit members, I know we're trying to really understand what are they doing with it, where's it going, and how should we be also kind of providing some feedback to the market, or, as of course as issuers, but trying to be focused on what's going to drive long-term performance at the end of the day. What's material, what's increasingly relevant to business, to society, and things that are right for companies to be measuring and taking action on. So that leads into disclosure, because a number of these frameworks, you might be doing a lot, but if you're not disclosing, then you are disadvantaged in terms of your scores. So again, especially as new disclosure frameworks come on, and these ratings become used more and more, again, I think it's going to be a two-way street where you have investors who are using these ESG data sources, and so they're sort of implying that they'd like more disclosure, but at the same time, you've got others who say, well, a lot of that stuff's not material. Focus on what's really important and just keep it simple. There's that dialogue is probably still in the early innings, and will play out as more investors really use and get their arms around this information. And similarly, I think as REITs continue to recognize, not just in the sustainability or ESG departments, but across the company, that there are reasons to kind of proactively manage these disclosures. That said, at the end of the day, I hope that we get to a place where we have good recognition of what what a good disclosure looks like on sustainability, whether that's in the corporate responsibility or sustainability report, on your website, or perhaps in financial disclosures. And a couple of the leading guidelines that have trillions of dollars of support behind them, TCFD, the Task Force for Climate-Related Financial Disclosures, being the latest one. It's got $100 trillion plus of support in a very short time since coming out in 2017. So it seems like the market wants it, but the how is still really to be determined, and I think that Alexandria, along with the committee, can provide some forward-thinking leadership and guidance on those topics.
All right, thank you so much for joining us.
Thanks for having me, Matt.
For more on this and other ESG-related topics, be sure to visit Nareit's website, REIT.com.